Hello and welcome to another update video about gold. Just a quick update today. The market has continued to, the market started, let's say, a little bearish into the week, and short term, that's absolutely not a problem. That's also what we were watching for in the last update. So this wave count here doesn't have to change. And indeed, it remains my perspective that the market should continue to trend a little lower. There is one way, I can see it potentially stretch higher, but if it does that, then it's likely just an extension of a B wave. So basically A wave, B wave, and then here A, B, C in a larger B, and then we come down. If that happens, this would stretch out this entire correction. And remember what I always say, corrections in the metals market, especially gold and silver, they are really, really frustrating. They can take a long time. So the only reason I say this is because the move down. So obviously what we're tracking here, A wave top of a larger diagonal pattern, right? So let me explain that again. For anybody who's new on the channel, you might not have seen the last update. The idea is obviously that this is a bullish scenario and we are in a third wave. The third wave started here with a low in October and the market completed an A wave. We are now in some kind of a B wave. B waves are always very frustrating. Okay, they are not really my favorite waves. But yeah, we are basically in a B wave pullback. The support area is clearly defined and we should see a C wave afterwards. And the idea is that this could take us to $2,400 and beyond. Okay, so again, interesting. Okay, but there is no sign that the C wave has started yet. And the idea is that we are going to look for a C wave as long as the price doesn't break below 1894, because that's the 78.6 retracement level. Below that level, typically, the probabilities shift towards a more bearish outcome. And it would mean that likely that would be my bearish alternative. The wave 2 is going to find a lower low and is going to reset. So that wouldn't be bearish, but it would be short-term bearish and would just mean that we're likely going to max out this green support area that did so nicely hold already in October. But this is corrective price action at the moment. So again, I don't think this correction is over. And I'm primarily watching for an A, B, C structure. The market reacted nicely to the proposed resistance area, basically exactly to the golden ratio there, the 61.8 retracement level, so perfect. Okay, and also the rally was only in 3 waves. So that's all coming together. What's not really coming together is this move down in the wave C. This is at least not an impulse. If it was an impulse, it would be quite clear, but it's at best a diagonal. So in a diagonal, the C wave would probably stretch a little lower. Current projections point towards, so what I can do is take the length of the A wave, go to the high of the B wave and look for the 100% extension level, points actually towards 1932. Okay, so ideally in such a scenario, the C wave ends below the A wave low and the A wave bottomed at 1988. Now what can happen? Basically after this C wave is done, we could say circle wave B is complete. Because the A wave topped here in December. The B wave could form a low after the ABC structure is complete, and then a larger C wave can take the price to 2,400 plus. What we see is that the price action currently is corrective. So yeah, I'm leaning still bullish. I still think the year could be bullish for the metals, especially gold and silver. But these B waves can always extend, right? And that's what I wanted to confirm. So A wave, yep, let's say that's a done deal. But then this B wave could stretch out. A, B, C in a larger B wave and then come down. Just be ready for it. There's no way really of predicting that. What I can highlight, if it happens, it should happen somewhere from this price region. And the one indication would be that we break above this last swing high at 2071. And that's a possibility whenever, and it's actually quite likely, whenever we don't really see the C wave come down as it should. I mean, it's coming down as it should, but it's not impulsive. It's a diagonal. And in diagonal patterns, we always have to be ready for changes of the wave structure. And at the moment, it seems like this third wave is still unfolding. Okay, and within the third wave, the C wave. Now, again, we can say, let's see, A wave, B wave, a target for wave C of 3. The range is sort of between 2019 and 1987. I think we looked at that in the last video. Let's see if we can form a low there in wave 3, and then wave 4 should start, and wave 5 should then form a last low before the more substantial rally should occur. And to be honest, this can take another few weeks here. If it extends, then it will take much longer. But all of that is just noise. What's really important is that the 1894 level isn't breaking anymore, because this really is the level where probabilities start to shift towards something more bearish. That's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, check out our S&P 500 and stock service. You can find the link in the description. Thanks a lot for watching. Bye-bye.